Let's move on. Let's get on board Anand Agrawal from V-Mart Retail, and let's talk about where exactly things stand. And with the onset of the festive season up ahead, how excited is V-Mart really in terms of what they're likely to see in the festive season? So let's get in a sense of that and how the online sales performance, etc., as well is going to be like. Let me welcome on board Anand Agrawal, the CFO at V-Mart Retail, joining in on the show right now. Anand, hi, good morning. Good to have you on the show. Anand, whichever player that we've been speaking with, your industry peers, they're pretty excited about the kind of rush that they're envisaging in the festive season. What is your own anticipation of how the festive season next month onwards is going to pan out?
Hi, good morning. And yes, you're absolutely right. With the last 1.5 years, which has already gone by, and we have seen a lot of downfall. I think we have all the reasons to smile, and we have all the reasons to look up to a very strong festive. We've seen a strong pent-up demand coming in the last 1.5, 2 months, which is a harbinger of good times ahead. But at the same time, I must say that the footfalls still are not up to pre-COVID levels. While we remain very optimistic, but we're still not, up to the pre-COVID levels in the same stores for most of the areas, and that still is something that we hope, we will, get over as soon as the sharp season gets over in the next 1 week or so. But yes, there is a lot of excitement. There is a lot of festivity in the air. We are seeing renewed demand by the customers. There is more occasion-led buying which is happening. There is less of comfort wear which is now moving off the shelf. There is more marriage wear. There is more occasions to celebrate, and therefore there is a lot of excitement in preparing for the upcoming festive season also. So from an organization perspective, we've been preparing for a strong festive. We have upstocked almost all our stores. We have been buying merchandise up to the normal levels, and we are preparing for a good communication plan also, and a good marketing and promotion push to make the festive work out the best for us.
I also wanted to understand about your recent acquisitions of 74 stores of Unlimited from Arvind Fashion, which you acquired for about 150 odd crore rupees. Just wanted to understand how the synergies have been panning out so far.
So while these are still early days, I think the strategy of getting a foothold in the South Indian market through this acquisition of 74 stores was more to set up base and use this platform, use this learning of the team that we have acquired, of the assets that we have acquired, and also the existing customer base that we get to start looking at expanding in South India, start looking at getting into the more tier 2, tier 3 towns and offering value retail, which we are very well known for, and get to a market where a lot of value retail in our kind of format really does not exist. Now, that is an opportunity that we had been eyeing for a long time, and I think this happened in the very best of times, because in terms of COVID and kind of market pressure that was there, we probably got a better deal than we would have otherwise got. In terms of synergies, obviously there are synergies of scale, there are synergies in terms of sourcing, there are synergies in terms of people, and most importantly, I think the synergies are more in terms of getting the know-how and getting the ground understanding of the local taste and the customer preferences, which we would have taken probably 3 or 4 years to understand. That comes in very handy when we start to roll out new stores as we move ahead.
Good morning. This is Nayantara. Talk to us a little bit about your digital plans. Since COVID, there's obviously been acceleration when it comes to digitization. You've done it. Everybody else is also doing it. So that's also getting more competitive. So to get a deeper
I
share of the wallet, what are your plans?
digital is something that is on everybody's mind, and the sooner we start, the better it is. I think for us also, digital has always been extremely important, and digital actually has two components. One is the the e-commerce part, which is enabling online sales channel for the customer base, and second is also the digital transformation in the way we work. From a a digital transformation perspective, we've definitely been working a very strong. We've been making strong forays into the automation journey for the last 5-6 years. But definitely, as far as the e-commerce part goes, or the online sales goes, we started this journey almost 2 years back, and happy to state that we've already got more than 2 million downloads of our app. Our app is present on Google as well as Apple. We've got a good number of customers which are already ordering online with us. We are a value retail player, and therefore the price points at which we operate are very, very sharp. And to operate at such very sharp price points, it becomes commercially somehow challenging. But having said that, I think the opportunity for the online channel remains very, very strong. And as you rightly said, everybody who's in retail has to be on online and has to be digital. And we are not shying away from it. We are definitely making more investments, and we are making sure that we are able to get more bang for the buck as we move on. The advent of the marketplace, in fact, we were noticeably absent from marketplace operations for some time, and we've started to make strides toward making our products, which are value retail products, also available at some of the leading marketplaces, and that also is supposed to augment our overall digital offering, in a very big way. As of now, while our online presence or the share of revenue might be very small, it is somewhere around 1 to 2%. But I think the plans that we have and the efforts that we are making, we plan to make it to at least 5 to 10% in the next 3+ years.
Okay, that's really important to know that from 1 to 2%, your online contribution could go up to almost as big as 5% within 12 months. Now, Ms. Agrawal, you're one of the best people to check with the recovery and what's happening in the smaller towns. So I want to ask you, when you look at maybe tier 2 versus tier 3 cities, is there a difference between the two, or is the recovery kind of similar? The shopping cart size is as big, the ticket sizes that are being purchased?
So yes, there are some differences as of now. Our sense is that tier 1 markets are recovering much faster. Tier 2 and tier 3 markets, there is a slightly slower recovery. The basket sizes also in tier 1 markets are slightly bigger, which is not usually the case. We've seen a very homogeneous kind of a behavior, across almost all the geographies and all the tiers, barring tier 4, which are very, very small towns. But in the last 2-3 months, there is a very distinct, slightly stronger recovery in the bigger markets or in the bigger locations. I think there is some sort of a little bit of economic pressure that we are still seeing in these smaller markets. The economic recovery has not been as fast in some of these very small, which are agri-dependent markets, if I may. But our sense also is that with the upcoming harvest season, which also coincides with the festive season, because we've had a good monsoon and there is euphoria in the air, also because of the strong vaccination drive. I think we should see more normalcy settling down in tier 2, tier 3 towns as well in the festive period.
Anand, given all the parameters that you just highlighted, just wanted to understand, when is it that we see your revenue profile improve meaningfully? And can that happen in the second half of the fiscal?
So, and that are very difficult to predict things in the way, in the current kind of economic situation. There are, a couple of factors. So one is, obviously there is an overhang of COVID. Nobody can rule out, if COVID has actually gone away or we will have a wave 3. The second part is there has been a very strong, inflationary pressure throughout the year, whether it is on raw material pricing or on, petrol, diesel pricing or commodity pricing in terms of steel, cement, etc. So there is a lot of inflationary pressure, which is also forcing, consumers to switch between discretionary and, sort of putting away some of the discretionary buys. Now, in addition to that, the government has just recently announced in the GST Council meeting, just happened, one and a half weeks back, about the increase or the potential increase of, GST rates on apparel from 5% to 12% effective January. Now, if you keep all these, things in focus, we're talking about at least 10 to 15% price increase for the normal consumer in just a 6-month period. Now, that's a very significant impact. Now, keeping all these things in mind, while definitely we would want to, get to see a very strong recovery and a strong festive and thereby normalized or a more than normal kind of a sales recovery in the latter part of the year. But I do see some kind of challenges. There are headwinds, and I think unless there are more inputs in terms of economic ease for the normal customer, for the public, I think we will still have some challenges in terms of getting to see a full recovery in the months ahead.
Okay, great to have you on the show, Anand, and highlight what exactly do you anticipate from the festive season going forward.